Let's start talking about risk. Risk is a big deal in investing. I mean, much more important than chasing returns is managing risk. And the nastiest event that's happened in real estate in our lifetimes is the 2008 meltdown. It was obviously a different macro environment than what we're dealing with here. But can you tell us a little bit about what you and your team were doing in 2008 and how that affected how you manage your funds today?
Yeah, thank you, Jim. So in 2008, what we were doing a lot of was buying real estate. We believed as things were going south and in terms of values and pricing that it was a phenomenal amount of distress, which was not good for the average person. We understand, but from an investment standpoint, there were so many opportunities available. So we were aggressively buying and building a portfolio during that time, and strategies. That, like you said, the macro environment. Some things were different then, and things that made sense might not work the same way today. Which we could certainly get into the nuance. But we were buying and building a business, and through that time of 2007, 8, 9, 10, we grew our revenue every single year during that time by over 60%. So we continued steady, consistent growth, finding opportunities, being able to manage through, as you started this point, risk. And I think the other just point I'll make on that I think is really important to consider, people to think about. Back then in 2006, we had the greatest oversupply of housing in history, or at least recorded history. Today, we have the greatest undersupply. So as you said, very different macro events. But even then, with the greatest oversupply in housing ever, rents in most markets for workforce housing stayed flat or went up. We're in a great undersupply today, but still, even in that time, rent stayed flat or went up and occupancies went up. So the ability, even in that time, to continue to generate cash flow was there. And so that's why we invest in this strategy. We believe even if property values drop by 50% tomorrow, A, that becomes a great time to buy. But B, our incomes, our cash flow is going to remain very strong.
The hosts of the YQA Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.